2022 was a brutal year in the stock market, with the S&P 500 down 20% for the year. But as with all negative outcomes comes valuable lessons. Hey everyone, it's Jonathan here. And let's talk about the 4 biggest mistakes that I made in the stock market in 2022. So the first mistake that I made was not acting on what I saw initially. So in the beginning of 2022 and late 2021, I did start to notice that the Fed was changing their language and they were becoming more hawkish about getting inflation down. And because of this, I strongly considered selling all of my stock positions. And there's that quote that time in the market is better than time in the market, which I think is a really good quote if you're someone who's a very passive investor and you hold a bunch of broad-based index funds. But for someone who buys individual stocks, I think it's actually a very dangerous piece of advice, because with single stocks, you have to understand that you're making a bet on a specific company. And companies go through cycles sometimes where they may not be performing the best, or they may not have the best leadership, or they may just be on their way to bankruptcy in some cases. So I think that advice always kind of ignores what's actually going on with these companies. You have to realize when you buy single stocks, you're essentially timed the market because of that. And at one point in 2021, I held like almost 80 different stock positions, which is absolutely insane at first off. And then also you can't track all of those various different companies and ETFs and everything. And I also just wanted to sell just simply out of making my life more simple. So what ended up happening is that in December timeframe, I ended up selling most of the stocks of money-losing companies that I had. There was one company in particular, Lemonade. I remember I actually made a video about why I'm selling out of it. I think that was back in like October of 2021. And man, I got so much hate because of it. And that was back when it was, I believe, like $50 a share. And now today, I think it's like $15 a share. So I ended up being right on that one. But so I did get rid of all the money losing companies, because that was kind of just like, yeah, you don't want to be anywhere near these companies when the Federal Reserve is trying to tighten the money supply. I did end up eventually selling a lot of my positions off in February and March of 2022. I basically sold off everything other than my index funds and Tesla. And the biggest reason for me doing this was just to simplify my life, but also is because a lot of these companies, I just saw them as massive risk if we do end up in a Fed tightening cycle that leads to a recession. So a lot of this consumer discretionaries, advertising, those kind of companies, I kind of ran away from them during that time. This lesson kind of reminded me of a quote that I actually heard from another YouTuber, Alex Hormozy, where he said, put lube on the sell and put friction on the buy, which pretty much means... So another lesson I took away was the lesson on leverage. So in the spring of 2022, after I sold off a considerable amount of my stocks, I also did take a HELOC on my house. And throughout a lot of the late summer and fall of 2022, I used my HELOC to buy the dip on stocks, mostly the S&P 500 and Tesla. I was buying Tesla somewhere in the range of about like $250 to $200 a share. We all know that after that time frame, that's when Elon Musk started selling shares to acquire Twitter and keep Twitter afloat. So Tesla shares plummeted another 50% after that. While during that same time frame, the rate on my HELOC doubled from like 4% to almost 9% where it's at today. This was kind of an issue. The good thing about it though is that HELOCs usually aren't callable. So in the case if a HELOC is callable, it's callable against the value of your home. But ever since the Great Financial Crisis, now and with the Frank-Dodd Act and all these other regulations, now typically HELOCs can't be given out past 80% loan to value. So let's say, for example, you have a $100,000 home. That means that the most amount of debt you can have on it between your mortgage and HELOC is $80,000. So because of that, typically HELOCs tend not to get called. And given the fact that most experts believe that we probably won't have a 2009 style housing crisis again during this housing downturn, that wasn't really something I was too worried about. Another thing as well is I also did consider the fact of that the rates on the HELOC may go up significantly. So I wasn't too taken away when the interest rates doubled and significantly increased my interest payments. And I was lucky enough to have the cash flow to be able to float those payments. So I'm able to kind of sit around and wait for the market to come back up. But even with all of these considerations and everything, I probably would not recommend doing that. Because, you know, like people, when we're in a bear market, a lot of people always like to ask, oh, how low can this ticker symbol go? And honestly, it could go as low as it wants. It could go all the way down to $1. Warren Buffett said it the best, that the stock market's a graph of human emotions, not fundamentals. So that's something there to keep in mind. And another massive lesson I learned in 2022. So another lesson I learned as well was the art of tax loss harvesting. So this one tends to sneak up on me every single year. But pretty much what tax loss harvesting is that if you don't buy a stock 30 days before you sell a stock for a loss, and you don't buy that same security 30 days after, you may be able to write off the lot. You're able to write off the loss against your taxes. Now, I'm not a CPA, so I can't give you tax advice. So I would encourage you to check with a CPA. The thing about tax loss harvesting is that it can be very tricky just because you really have to time your buys and your sells, especially at the end of the year, because it's very easy to mess this up. So for me, I think in November and December and even late October, I'm going to be a lot more careful about what I'm buying and selling, so I'm able to take advantage of this in future years. So for me personally, I'm an investor that's very growth oriented and that's very fundamental based. And because of this, times like 2022 makes cash the most valuable asset that I have. Because think about it, if one of my favorite stocks sells for $100 a share and it falls 70% in value, then that means that now I could buy those shares for $30 a share. So now my $100 just went free plus times as far because the market fell, which makes the cash much more valuable because you're able to buy more shares. So now if you believe that the shares will now go back up to their all-time highs or even past that, then it makes buying in those kind of times much more valuable to you. And this kind of goes back to what I was saying earlier about putting friction on the buy and being very careful about how you're deploying capital. So I've been investing in the stock market ever since 2018, and I'm still learning new stuff every day about markets and about money and the Federal Reserve and things like that. 2022 was by far the most important year in my investing career so far, just given the fact that it's really these kind of markets where you actually learn about bear markets. 2022 was technically a bear market, but I mean, it was a bear market that lasted for like 3 weeks. So it doesn't really count. But this is like a real true bear market. And it really puts an emphasis on risk and the whole risk-reward calculation. But for the people who did stay in the market in 2022, hopefully this leads to higher highs in the future. Thank you guys so much for watching. As always, please like, share, and subscribe. And I'll see you in the next video. Peace.